Good morning, good afternoon, good night. I just wanted to keep you all in the know, and I hope you're all watching here because yesterday's stream, before the market fell out from the bottom of us, I was outlining all these levels to the downside, and it's been happening over the course of this last month where I've been outlining levels that felt a little contrary. They didn't feel so exciting because they're to the downside, but we've been hitting these targets. Look at Bitcoin, fell all the way from its high up here at $74,000, all the way down, back up, oscillating within sort of multiple patterns here. We're in a very consolidated, uncertain moment before the market takes off and goes to the upside. So these small dips that we're seeing right now, we have been able to outline almost specifically to where these are going. So I hope you're following us. I hope you're hitting that like button. I hope you're dinging that bell to stay in the know, because we are letting you know yesterday, before this even dropped, where it was going to come down to. Also with Ethereum price action, we were talking about coming back when it started moving back up, potentially testing this area again. We also see AVAX dropping out of this falling wedge. Everybody says, well, it's got to break bullish. And I was keeping you all in the know that, hey, if the market's going to be acting more bearish, if Bitcoin's going to be pulling down, if there's going to be uncertainty because of what's going on in the Middle East and the dollar, and also, oh yeah, tax day on Monday in America, some people are harvesting some profits. And what do we see? AVAX loses this level here, and we come down and test almost near this trend line that we have right in here. A little bit short, but basically keeping in where these previous lows are. So the markets are doing exactly what we are mapping. And look at this. Solana drops right into the box that we had. Remember, this is Render. Remember when the price was all the way up here and everybody wants AI to keep going and Render to keep going? You know, we were talking about that summit that happened with NVIDIA and a potential drawback. And if you are interested in these assets, we should be excited about this, not scared. And when you're excited about it, then you can have a plan of action to get involved at certain levels that can give you basically this asset at a discount. And we're marking out exactly where these levels are. And the market is just hitting these. Solana. Look at this. Solana pushed all the way up here over to $210. And we were marking out these levels to the downside. We originally had these over here showing this 169 level. Before this, we also had a level. I've removed it because it's not relevant anymore. We had this level at around 180. Price came, and I was watching these lower levels because the market was looking like it was acting. It was running a little too fast. We're getting up to that $69,000 level on Bitcoin. And we know that once we get up to this level, let's go to the 8 hour. We know that once we get up to this level, why is this level important? Because this is essentially consolidating around that previous all-time high, similar to what we saw right here coming in. Price action comes up to that all-time high area, consolidates, in this case, below it, about 30 days, 40 days. And what do we see right here? Previous all-time high range. Yes, we're kind of chopping across it. Let's actually take all the lines and colors and marks off. Price action, you see, comes across. We're consolidating here, just like we did here. Nothing is different. Let's take advantage of the chop that's here, and also realize, as bullish as we are with all these new capital flows, that there is a potential for a washout in price action to the downside. That's why I've had these lower selections and lower price targets on here, because we haven't had any sort of large pullback coming into around and in context with this halving like we've seen in previous cycles. Now, we may not get all the way down to 58, may not get all the way down to that 200 moving average. And let's go out to the daily, the 200 moving average, which is down here at this 52, 53 level. We've got to be careful about what we're doing here with our bullish bias. As exciting as things are, the prices have been telegraphing that they've wanted some further downside. And we see this price action came down to this level, bounce, loses this level, comes down to this next level we have. We can see on Solana, it did the same thing, just like I was just talking about. Bounced up from here, found resistance, support, resistance. And now look how much smaller this move is right here, starting to get a little weaker, and the bottom just falls out, comes right to our next level down here in the 150s. And everybody thought I was crazy for saying this. Hell, we might even get a price action all the way down here into the 115, 120 region. But as it stands, this is a pretty significant pullback in the market. So let's take advantage and start figuring out if we do want to be dip buyers in the context of what the market's doing right now, then you need to have your limit orders identified at the levels that you want to have and have them in the chart, because you never know, you could get a very fast wick, something that like a flash crash down and right back up. And if you have something set, you'll be able to take advantage of that price. And this is the same thing is happening right here. Some people had their level set in this zone, and if you put it all there, if you blew your wad, then you didn't have anything to layer in here. This is why it's good to ladder your entries, meaning breaking up your entries and having some put in here, some put in here, some put in here, and then you get the average of those three prices. Because we can never truly know what's going to happen in this market. But man, here on the BitLab Academy, here with all of you, and right now, hit that subscribe button and join us here. We're keeping you on the right side of the trend, showing you where great tools and resources about what's going on with price action. We've had the roadmap for you. Even Cardano here, looks like it's a messy chart. And it is, because we've been doing a lot of TA on this, but I was watching this trend line right in here. Once this bounced and we had a little bit of a double touch here with the two different trend lines intersecting, came back up, rejected, showing weakness. In fact, we also have a head and shoulders right here, but this gave us that target, not only to this previous range low, but breaking down. We also have this larger head and shoulders that we outlined earlier this week, I believe, at the beginning of this last week. And the target to this goes all the way down here. So we've almost satisfied this target with this breakdown right into this trend line, this area. You guys thought I was crazy when I was talking about potential coming down to low 50s, mid 40s. And this is exactly what happened. Boom, right into it, right, popping right back up to 50. Now, will this have another leg down? It is still looking weak. We still have a bit of negative money flow here, but all eyes are going to be on what's going on globally over this weekend, but also what's happening post-tax day on April, 14th, 15th. So April 16th, which is Monday. There may be not as much movement in the markets. We can never really know why the markets do what they do, but we can outline these levels, and we saw these levels to the downside, and they are hitting. Also, Link just consolidating big, distribution top here. We got the lower low followed by the lower high. My favorite signal in price action. Why? What do I mean here? We have higher lows. Okay. All of a sudden we're bouncing on a flat zone here. Same lows, same low. Now we get a lower low followed by a lower high. That telegraphs the bears are taking over in the midterm. And what do we get? A breakdown, and the price action comes down. Look at this. I did not add this morning. This was here from a target that we drew from the larger things at play here. This inverted cup and handle right here, and the target down here. We hit this perfectly. Matic just dropped right into the next zone that we had right here that we have marked out from this previous price action. I shared this with you all throughout the week. It felt crazy when price action. Oh, it's a bullish pattern because this is a falling wedge. And I said, you know what? If the market gets that scary sort of whipsaw, and watch for whipsaws, meaning the price action goes down really quickly, goes up, tricks you into thinking it's a full reversal, comes back down, tricks you that it's going back down, and then it finally finds some resolution. We're coming into a very contentious part of the market right now around this halving. People don't know, is there going to be a sell-off, like huge sell-off? Is there not? And we're seeing this result in a little bit of uncertainty, a little bit of lack of conviction from the bulls right now. So everything is pointing towards opportunity is here. Opportunity is presenting itself. Near also dropping down here. Look at this flat sort of consolidation sideways, and comes right down into the zone we have marked out at this 1.382 on this move that we had mapped out. And remember, we had the rising wedge that tends to say, the rising channel. These tend to break bearish. What happened? Broke bearish, came up, rejected, and comes right down to another target. One of the ones that is kind of sitting fairly pretty, and this is exactly what a whipsaw is. Aerodrome. Look at this. Trap to the upside, trap to the downside, with the very, very quickly eaten up by the bulls, and then now right back at equilibrium. Look at this. So my question here is this starting to get a little bit weak? Will we get a further move down? But we've kind of flushed out liquidity in both directions here. And remember, this is on that narrative right now on the base chain on Coinbase. the largest DEX on base there. We also see Ondo, very fast sell off and then move right back, V-shaped recovery right back, but came right into a target. Now it's finding some resistance here. It's going to be interesting if we see some subsectors actually start moving bullish while everything else is sitting sideways. So let's stay vigilant. Let's realize where we're at in the scheme of things with this market. And I just want to point to one more thing on the macro here. And we have an incredible interview that I'm doing with Texas West Capital, Christopher Inks. So stay tuned for that. But I wanted to give you an update this morning about where we are with what's going on in this market and on terms of the macro scale and the conversation that I have with Chris. And we recorded this last night, and I beg you, do yourself the favor of listening to these types of conversations, because we talk about what's going on with Bitcoin and Ethereum and the ETF, the AI narrative, real world asset. We're going to ask what his favorite narrative is, what narrative is a little bit overhyped, which one's underhyped. You'll be surprised by his answer. So definitely stay tuned for that. I'll be live in the comments. I wanted to record this. This is recorded this morning, Saturday. If you're watching this anytime in the future, gain knowledge from these things. You don't need to see every minute chart live as it's happening. You can watch for the strategies people are using in videos like this. So I hope you join our community. I hope you hit that like button. Hope you subscribe. Join us here. And this is a macro picture I was telling you about. A dose of Bitcoin reality. This pullback as it stands is but yet a wee little dip in the scheme of things. This is your opportunity to seize it. Yes, markets may have a deeper dip, but macro shows up from here is inevitable. At some point, we are going to have major rippage to the upside. So hit the like button for that. And this is that chart showing these are the relative size of dips along the way. See these dips along the way in this bull trend? See these massive, this is the size of the dip. See from the high it gets to, and then how far it dips down. And then look at where we're at here. And this entire cycle from January last year till now, we've had relatively little baby dip. We ain't seen nothing yet. So do be prepared if we do get a larger washout to the downside, because remember, we're still well within this accumulation, distribution, let's just call it consolidation. We're not going to know if it's accumulation or distribution until it chooses the direction it's going to go. But remember, this short-term holder cost basis is rising and demand is rising. All the things I shared with you all week here on BitLab Academy. So stay positive, stay sassy, stay spicy. Let's take advantage of the opportunities in here. And now let's throw it into the main man himself, this interview with TX West Capital. We got the green, we got the red. The markets are moving all around. Some people are losing their minds right now because they're zoomed in on a chart that looks like the end of the world. Bitcoin has jumped off a cliff. But as you know, when we zoom out on this chart, you cannot even tell that any price movement to the downside has happened. Let's take a little breath here. And rather than me just talk you through it, I've got an incredible guest today. We're going to be jumping in with Mr. Christopher Inks from Texas West Capital. We're going to talk about what's going on, because it's not just this specific Bitcoin price action on the 4-hour or the 1-hour or even the daily that matters. We've got to understand broader context, and then we can zoom in a bit. So Mr. Christopher Inks, how you doing? How you feeling? Are you losing your mind right now?
Man, you know what? I think even if I was emotional and whatnot, I think at this point in my life, 50 years, almost 50 years in, I'm not sure I'd have much mind to lose anymore. So, yeah, no, I'm good, man. Again, I've continued to talk to people, and tell them, listen, as far as Bitcoin goes, because that's generally my focus. I'm like, listen, we've been sideways for just over a month now. Unless we're losing 59,000, don't talk to me about pullbacks or anything. We're just sideways chop right now. So yeah, I'm good.
Sideways chop. And I think the Kobe Essie letter had the perfect, which is an account on Twitter. Some of you all out there might be following. And if you're not, you should. Game of Trades, Kobe Essie letter, Texas West Capital, Mark Yusko, a bunch of people you should absolutely be following. But they contextualize very brilliantly, and we can see it in the price action on the charts. Things aren't just frustrating trying to figure out what direction things are going right now. Just for Bitcoin, there are key economic signals on multiple different factors that are contending with historical views about what should happen. And so, I think right before we jumped on, you had mentioned that the dollar, the DXY breaking to the upside. What are some of the other things you're looking at? Being a crypto trader, and I know you trade other energies and futures and options, you do it all. So what are you looking at when you're considering Bitcoin in the crypto market right now? But we're seeing the dollar breaking to an upside. What are the other sort of factors you're taking into account right now? And why the hell is the dollar going up? Is it Iran? What is it?
Yeah. So, at the end of the day, the DXY really has just been going sideways since, gosh, I guess it was probably around January of last year. So, I mean, it's a pretty decent sized range, but nonetheless, it's just sideways. It's just overlapping price action. And for me right now, it just appears to be corrective before, ultimately further downside. What was interesting to me was that we saw the dollar break out against the yen the other day, just a couple of days ago. It broke out above 153, which it hadn't been above. It hadn't broken out above since I guess it was probably 1990. So if you zoom out on that USD yen chart to like a monthly or a yearly chart, what you see is this huge 34-year accumulation that of the dollar against the yen. And so I think, it's not going to happen overnight, but I think the trend is the dollar that seems to be rallying against the yen overall for a while longer. It's going to be, I think. But, when I'm looking at I don't normally, a lot of people will try and look at correlations between different markets. And because it happens here or there, they'll say, oh, they're correlated, oh, Bitcoin and the stock market are correlated because on this 2 days, they kind of moved in the same direction, or the same daily candle, on the same day, they both came down. So they must be correlated. And really at the end of the day, I don't tend to give that a lot of thought because the way I look at it is if it really was correlated, then in order for it to be important, it would need to be something that happens consistently, not something that happens now and again. So when I look at charts, I don't, like a lot of people, they'll say, oh, well, like especially with Bitcoin, right? Oh, well, the last time this happened, so we need to happen again. I'm like, that's one time. One time is, I can't even use the word statistically, to say statistically meaningful because it was just one time, right? That could have been a fluke. And so, I tend to stay away a lot of the, this means this or that means that in different markets. And instead, I just tend to trade the charts themselves, the markets themselves. So, when it comes to Bitcoin, I'll really just focus on what's going on with Bitcoin, what's going on the chart there, rather than all the extraneous information comes out. Because if you remember, it was supposed to be the end of Bitcoin in the markets when Russia invaded Ukraine, right? I mean, and here we are continuing to go up ever since then.
Yeah,
so,
I wonder what the X factor to the upside has been since then. And this is one of the weirdest things, I think, growing into being a participant in this market, when you're actually doing it consistently, profitably. It's a very, I don't even know what the word is, but it changes your view or awareness of what's going on in the world because. And I'm not by any means a fan of war whatsoever. But when I'm somebody that is investing in markets, trading, watching different things, it's very interesting to see the correlation of, and let's take the word correlation up, the impact that can happen sometimes periodically with one world event that does immediately draw fear, but then ultimately ends up sending markets, higher and higher and higher. It's like the military complex is a real thing. And as unfortunate as that is, if we are participating in these markets, we must also know that so we can protect our assets or trade them and invest them in the most meaningful way.
Yeah. And so you bring up a really interesting point. You talk about war. If we look back historically on the charts, war doesn't happen when the stock market's running up. When the stock market's rallying and whatnot. Wars tend to happen when the stock market is pulling back after like a huge correction or a depression or a recession or something like that. It's the product of all that negative mood and whatnot happening down there, rather than all the even exuberance that happens with these bigger markets. So if you think about the U.S., for instance, we went into over there in the Middle East. We did our whole thing over there back right after the dot-com crash, right after the dot-com bubble. If you look at Russia, they invaded Crimea and then they invaded Ukraine both times after their stock market had pulled back significantly, was back toward the bottoms of those corrections. And so, uh, people are worried. I mean, you got to be worried. I don't know. I think maybe I grew up kind of jaded. I'm going to be 50 this year. I grew up back during the Cold War. My dad was in the Navy. So I lived it. I lived the life. Every day it was all about what's going on with war, and what's going on and the potential for nuclear disaster. Hey, by the way, just sit under your desk. You'll be fine. Nuclear bomb comes, right? And so, I kind of sit here now and I guess, maybe that's just kind of hardened me to these kind of things coming on. But obviously it's something that people want to pay attention to. But again, war doesn't usually happen for a country unless they're like significantly pulling back with the markets. It doesn't usually happen when the market is extended, is it, and is making new highs and stuff like that. So, when I look at that, I kind of think, okay, well, a lot of talk going on, a lot of things going on, but what does it actually really mean? Doesn't mean it can't happen. Again, nothing is 100% guaranteed in the market. Nothing happens consistently every single time. But, until it does something different, that's kind of the way I look at it.
Well, all right. Now let's both take off our fake political pundit hats now, and let's talk. Let's jaw a little bit here around what's going on with Bitcoin. And here's a funny question: is there something really going on right now with Bitcoin that is consolidating near a previous all-time high?
When you say something going on, do you mean like
I go on crypto Twitter right now, and people are messaging me, "Oh my God, is it over?" I look back at the 2020, when we basically got up to $17,000 to $19,000 previous cycle. We consolidated there for about 30 to 45 days, and then we launched, and we are literally perfectly in that same exact window. And Chris, I don't know if you've seen this. You probably have, because you're an excellent chartist. But I still am of the belief of the last cycle. There's two tops, 64 and 69, and a lot of metrics. Take out this whole number. The second one was higher. A lot of metrics out there would suggest that the first one is the meaningful top that we should really be paying attention to. Now, when I was looking at this exact measurement we were talking about of where price action went from, it crashed from 19,000 down to 3,500. If you draw, and I wasn't even trying to measure this. I drew basically a regional box from that top all the way over to where price consolidated once it came back up into that level. And I was like, okay, well, I copy pasted that on the chart and then dragged that up from the $64,000 mark. And it is exactly perfectly the same amount of time from the 64 top to where we're consolidating now. So there's still this debate, is it the halving cycle theory? Are we ahead of course or not? Because some measurements show you we're 100% on course. Just like the correlation you said, all these things. And everybody out there watching, please, I'm even discrediting myself. Nobody knows. All we're doing is trying to find where the most meaningful data is finding some confluence. So is there something going on right now that we're having a pullback, or is this all within the cards of what you've been expecting?
Yeah, I've talked about it a few times on my show and other shows here over the last probably month or so, right as we were getting to that all-time high. We always have to be aware that there's a possibility it could break out, just kind of like pop through and go. But most of the time, when you hit an all-time high, most of the time you're going to get some consolidation at that all-time high before you break out. And if you think about it, it makes sense, right? Because you have the people who are going to try and sell that resistance, and then you have everybody else getting excited about the potential for it to break out and blue sky and price discovery. And so you have that back and forth that happens there. And so what's happening here, really nothing not expected. I know everybody hates the sideways. Everybody hates the chop. Everybody gets bored because they want to jump in right here and immediately have it going up and never, ever come back against them. But that isn't the way it usually works. So when I'm looking at this, it's the same thing. Like you mentioned there, it's the exact same thing. And I pointed that out as well, that we had back in when we broke out. I guess it was probably 2019. when we broke out above the 2017 swing high, all-time high there. We hit it, pull back, hit it, pull back, and then kind of went through it. So multiple weeks going sideways. This time around, with our consolidation, you can see that we do have higher lows consolidating toward resistance. And we've got a volume dropping off, volatility dropping off, which is expected because you have the shorter movements. And so most of the time, when you have this type of kind of consolidation, especially prior to, at resistance, but especially prior to an all-time high area, most of the time that's going to break out to the upside. Because you've got what you're showing is you've got that consistent buying that's not letting price drop lower. It keeps dropping, it's making those higher lows toward that resistance area. And so you get ready for that, that rubber band, is getting wound up real tight, and just all it needs is a little breakthrough. And so here's the other thing. We know that, if we look at the COT report of the CME, right? CME is the largest Bitcoin futures market. Their COT report shows that for quite a while now, institutional investors have been increasingly long, and your hedge funds have been increasingly short. So we've got this huge record level of shorts sitting right around that 73,000 area. So if we hit that hard enough and we pop right through it, all of a sudden that starts a cascade of
rocket
shorts
ships.
that, they have to, they have to cover, they're going to go long to try and jump on it. And, when you're short and you're covering, you're getting out of a short position, getting into a long position.
So you're saying we have the recipes of the GameStop situation here with Bitcoin, but the difference here is Bitcoin is a real, there's such an interesting next year ahead of us that I don't even, I'm almost like giddy with joy that the price is back where it's at after I endured through so much of and you did too. And it's like, okay, I'm really, really seeing a lot of the visions that I've had, what I've mapped out for 2 years. It's all, coming to fruition, and seeing BlackRock and Fidelity and VanEck and Japan changing their corporate strategies for Bitcoin on treasuries. And we have Hong Kong and China, and Australia is allowing US ET. It's like, it's literally, it almost feels a little too good to be true. Do you get that at all? Like where it's like potential washout, maybe down to the golden pocket at 38, which I haven't even wanted to pay attention to because we haven't even touched the cost basis yet. Or do you think, is there going to be that sort of huge liquidity washout? Is that possible yet now with all this buying pressure?
It's definitely possible. Again, we're in the markets. You said it well earlier, you, me, people like us that are out here, nobody knows for sure. Nobody has a crystal ball that tells them, guarantees that whatever they're saying is going to happen. Now, I know there's a lot of influencers out there that'll say, hey, listen, I guarantee this was going to happen. And then they get fortunate and it happens. They're like, look, I know what I'm talking about. But, doing this for almost 30 years, I sit here and I try to let people know that that isn't reality, So we're all out here just trying to figure out, based on what we know in our experience, and the capacity to which we use that gray matter in our head, to figure out what is maybe more likely to happen. But then, again, proper risk management is absolutely the most important thing, we do day in and day out as traders. And as long as you have that, that saves you from yourself, that saves you from being wrong. So I say all that to say that it's possible. I don't talk about a whole lot because we haven't even lost 59,000 yet.
I know, right?
Again, so for me, if you're looking at market structure off that 2022 15,500 bear market low, that 59,200, depending on what chart you're looking at, which exchange you're looking at, that is the last higher low before the last higher high. And so when it comes to market structure, we actually have to break down below that to even start thinking about any kind of real real kind of pullback or extended duration kind of move for that. And it's not even just a dip down. We could have a dip down, wick down, and a close back up. So what I tell people is, listen, the way you play that is on the weekly, you want to see a breakdown and close below that. You want to see a rally and retest. And then you want to see a breakdown below that low that you just printed. And at that point, your odds are increased that now you're going to have come lower. And so in that case, then maybe I might start looking at 38, but not even before 52, right? 52 is that next kind of level. So if I'm looking at that, right now, as long as we're above that 59, the odds are much more likely that we're going to go up higher.
I mean, I agree. So I'm so bullish. I mean this. I am so bullish that I force myself on a daily basis, not only in the charts, but when I even have discussions with brilliant people like you. And I asked Mark Yusko the same thing. And, I force myself to ask the very bearish questions because we're so bullish. It's like, I don't want to be left without a plan. And I don't want anybody watching this. I don't want any of you to be left without a plan. And it's better to hedge yourself a little bit and be aware at minimum. Like, for instance, the Black Swan, March 2020, people saw it drop from 6,000, 8,000 down to 4,000. And they want to get out. And then the market just completely slingshots back up. Of course, we're at a different part in the market cycle now. But technically speaking, we're at the same spot in the market cycle now, right? Where we're at in relationship to the halving. Hold on, I have to sneeze real quick. That bug flew up my nose. So we got to talk ETH also, though. ETH is right here on the cusp of potentially having their, not having their ETF denied. ETH is on the cusp of potentially having their ETH not approved in May. Do you think that going into this next bull market cycle where so many people in the altcoin space are expecting that rebound on the ETH to Bitcoin chart, the ETH to outpace Bitcoin as it has in the past, but now with this sort of wind out of the sails of just something speculative at this point, does that change the dynamic now when we're looking at ETH? And does that trickle over into the altcoin market as well?
Yeah. So when I'm looking at it again, for me, it's all about the charts, right? And I like to say that, that the news is always in the charts, and people misunderstand a lot of times. They're like, oh, well, you knew then that on this day this was going to happen. No, no, no. What we mean is you are going to come up with some news event when this breakdown when this level is hit, that you're going to attribute to that, but which when we look at it, say with Elliott wave or something, we had a good idea that this is a likely area that it's going to reverse or it's going to move through or whatever. And so, with that in mind, I kind of look at it and go, okay, well, we're kind of at the initial target area we're looking at. If we break down further, we're still in what I believe is a wave 4 on that really large chart, macro chart. And so for me, it's just par for the course, right? If it breaks down a little bit more, well, I've got some targets a little bit lower down. I've talked about them before, but it keeps it all still in wave 4. And unless wave 4 is invalidated, then my whole idea of what's going on, it still continues to be. And so what does that mean? Well, I don't expect Ethereum, the ETF, to get past here coming up. What is it, May? I guess it is.
Yeah, I don't either.
I don't think it's gonna be there. But I think at worst that becomes what most news events are, which is a knee-jerk reaction. You can think about the CPI the other day, right? And we had everybody's like, oh my God, it's the end of the world. And a couple hours later, right, it's already coming back up. But that's the way, people tend to be usually in markets. We're emotional. We're human beings. That's what makes us human. That's great. It's not so great in markets. And so, people are freaking out on news events because they don't understand that, the market has structure. They're reading books about how the market is efficient, which it isn't, or how the market is random, a random walk down Wall Street, stuff like that, right? It's not. It's made up of human beings. It's you and me. And as human beings, we generally tend to move back and forth. We have like this in our mental state, right? Our psychological, emotional state, we have this line that we're at. And when something good happens, we'll pop up above it for a little bit, but we generally tend to come back down to it. Something bad happens, we'll drop down, but eventually we come back up, right? Most people, well-adjusted human beings, that's what we do. So the market itself is just this aggregate look at this move between fear and greed, so aggregate across the market. And so when you get everybody with that same kind of general thing that happens, the movements in the charts then become somewhat predictable. Does that mean you're going to get it all right, all the time? No, because, there's different ways it can play out. But what it means is you have a chance, if you're looking at it and you understand this and you understand what that movement is, that you can actually start going, okay, well, look, I believe based on this action, we're going to do this. And in order for me to look at that, I needed to get through this level. If it goes through this other level in the other direction first instead, then I know I'm wrong. and I'm good, right? And so, that's kind of how we approach the markets there. And so when news events happen, whether it's CPI, whether it's Iran, whether it's Ukraine, Russia, whether it's CPI, whatever it is, they tend to end up just being reactionary and, just short lived with it because the trend is already established. Very occasionally, your trend, some news event will coincide with the trend change. Most of the time, it doesn't, though. But it's those few times it does that keeps people thinking, oh, it's a news event, and that's what changes everything, unfortunately.
Well, I've got an interesting question for you. We have these ETFs that have launched, and we've seen not only the record-breaking precedent that the IBIT, the BlackRock ETF, has been the fastest growing and most interest of any ETF in the history of every ETF, traditional assets, commodity, Bitcoin, this thing that was so dark listed in mainstream media for a decade plus. And the funny thing is, one of the worst turns of phrase was from Larry Fink himself saying that Bitcoin was an index for money laundering. Now he runs a Bitcoin ETF, a spot ETF, which is the largest ETF in the history, the fastest growing one in the history of all ETFs. So it's interesting, that trajectory that I've seen. Now, with the fast growth of this Bitcoin spot ETF class, do you think, as much as I love self-custody, do you think in 20 years' time, it's going to be normal for people to self-custody, or do you think there's going to be the majority of people that have exposure to Bitcoin is going to be through some ETF or ETP?
Yeah, I think the latter. When I came into the space in January of 2017, the one thing I said over and over that year was, listen, as long as it's this difficult with the wallets, and even today, I've been doing this since 2017, 7 years, right? I still freak out, just about freak out every time I send one. Yeah. You got to make sure that wallet address is just right. And so,
I know it's supposed to be 6 minutes, but it's been 5 minutes and 45. Oh, come on. Did I mess up? And then your internet goes out. You're like, I lost everything. And then your emails.
Yeah. And so, at the time I said, and I still hold to this day, is that until it becomes easy to do that without all this potential, oh my God, I'm going to lose it all if I screw it up. That kind of keeps the mainstream out of it, right? The mainstream, they don't want to potentially lose everything they have by sending it to the wrong address because it's unrecoverable, right? They don't want to be their own bank. Right. Human beings don't want to be their own security. That's why government says, oh, listen, we're going to protect you now. We need this much extra power, but we're doing it because we're going to protect you, and of course that's never a good thing, but that's what happens, right? People are like, oh yeah, okay, go ahead, because I don't want to have to think about protecting myself.
Right.
But it's the same thing with banks, right? I don't want to think about being my own bank. So I think as it continues on, I think we get mainstream adoption because of the ETFs, the ETPs, things like that, because it allows people to get in and out without having to do all the other stuff, without having to worry that they're going to send to the wrong wallet address and lose their, heaven forbid, 10 million, even $1,000 for some people, it's a lot, depends on the person. And they can get in and out of it. ETFs are really liquid. They're real easy to get in and out of. So that gives them exposure to the asset class with these great, returns that we've had, but at the same time makes it a lot easier for them. They don't have to try as hard. They don't have to learn as hard. Now, I think the other side of that is that you have adoption, and this always happens. You're going to have adoption by a greater group of people that don't really understand what they're adopting. And that's going to be a hard thing for Bitcoin maxis, right? They're going to be like, Stalin-esque on you need to know all this. And the reality of it is, for something to gain mainstream status, most people aren't. Most people don't care. Most people won't care enough to learn about it. And, if somebody is in that category where they feel that way, where they feel like people need to know, they're going to really have to relax themselves, because I think it's just going to keep growing. It's going to keep getting this bigger mainstream adoption. But in doing so, in general, the percent of people that are actually involved with Bitcoin, whether it's themselves, through holding it themselves or through the ETFs, that percentage that actually understands it and looks at it, and maybe even has read the white paper, that percentage is going to grow smaller and smaller of the overall percentage that actually is going to have exposure to it.
I could not agree more with you. And I think that highlights something that, how early we still are, that there's still a significant portion of people that I know within the crypto community that they expect and want people to know more about these technologies. Now, I think it's absolutely beneficial and crucial, but I don't expect if I hand a guitar to somebody for them to know how it was made, for them to know how to play every fret, for them to know how to do harmonics, to finger pick, and to know how the electronics work, to know where the wood came from. Because it's just, no, you can play it however you want to play it because it's your instrument. And I think we all that are newcomers, we all that have been here, sort of paving the way, of early adoptions, early adopters in this space, we're obviously attracted to it differently than the mainstream's going to be in the long run. We're attracted to it because of the technology. We're attracted to it because of the decentralization. Check out this halving thing that's programmed in. Check out this SHA-256, man. It's like, can you believe every 210,000 blocks? What the hell's a block? Well, it's these things like because we understand the technology, that's what's novel to us. It's amazing. And to somebody on the other end, somebody that hasn't adopted it yet, with how much news media is out about it now, the majority of people that come in now, they want to, can I spend it? Can I save it? Can I trust it? That's all they care about. And to your point, ease of use. I cannot call myself an expert. I'm somebody that's been in this space for a long time. And yet, as you said, every once in a while, I'll be in the office with DZ and Josh and Nick and a bunch of the guys that are all crypto professionals, and somebody will suggest a coin or this airdrop, and everybody's gathered around a desk. Hey, show me how the hell you do that. We're trying to. What wallet address are we doing for this one? What do I need to? And it is true. We are so early, and yet we expect it to move so quickly, and it's more so with the new people coming in.
Yeah. No, I mean, that's, it's exactly what it is. And I love your analogy with the guitar, again, playing guitar myself, drums and all that stuff, again, if you're at a certain level, you expect other people to need to be at that level. But at the end of the day, it's like, it's your instrument. You play it how you like. And I think that's a fantastic analogy for Bitcoin, right? Because you're going to have people that are going to come in, they're going to be excited. They're going to be nerds like the rest of us. And they're going to want to know all these things. And you have people are going to be maybe semi-nerd, maybe want to know some of it, but some of it's going to get into too much, like, it's too much. But the greatest majority of people are going to come in and they can be like, listen, I want the appreciation. I want the security. I want the ability to use it, to be able to get in and out of it easy. Those are what matter most to me, is what they would say, and I think, if we really want Bitcoin to be taken seriously, which is everything I've seen since I've been in 2017, right? It's been this whole idea of how can we be taken seriously? Because like you mentioned back then, it was all, even Larry Fink was like, man, money laundering, and it's the devil's biscuit or something. I don't know. But, so they would do that. And really, here we are now on the precipice of really, Bitcoin just really exploding. The US came in, the SEC came in and said, okay, we'll give you the spot Bitcoin ETF. They do it. And now here you go. Here's Asia. Here's everybody else, jumping in, because, if the US says, hey, it's okay, it means it's probably okay. We can do this. And now it becomes, because the government, puts a stamp on it. Now it's like, oh, okay, well, now it's okay to get into now. It's not, maybe it's not really a Beanie Baby, and maybe it is more like gold or something that people take seriously. So, but that's that trade-off.
So on that note, this brings up an interest, and this is not a conspiracy theory. This is just an open question that I have in my head that, and there's no way we can know the answer to it, but it's fun to pontificate on such things sometimes. Bitcoin spot ETFs were approved, passed, and enacted the next day. It's almost as if they're fast-tracked. It's like there were some discussions going on behind closed doors to make that happen. It's the only way that could have happened. Now that's fine. But now we see, the advent of, do you think in any way that the approval and a launch of the Bitcoin spot ETF was any way a token for Gary Gensler and the current administration and the SEC and so forth, so on and so forth, giving a token saying, hey, we're doing something positive towards crypto. But now we see with the launch of the lawsuit, the Wells notice, I should say, against Uniswap, do you think there's going to be a more of a focus and a constriction on the the majority of the rest of the market? Because, okay, we passed this. Now let's sort of focus on this and suppress this a bit, whether it's to, get more money into Bitcoin, which I don't think that would be it. But it just seems so nonsensical. I don't even know what I'm asking. I'm trying to work this out in my head because it doesn't make sense after the Coinbase court case that they said that, third party is not security. So what the is going on, Chris? What is going on with our government and financial decisions, man?
Well, I mean, I don't think it's a stretch to say that Gary Gensler is not a fan. And he's the big dog there. He's in control. But it's also the head of the SEC. It's a political position, right? So if you're in that position, you're not thinking about, okay, well, this is the end of my career. You're thinking, how does this catapult me into the stratosphere of politics, right? So either you're talking about, deep inside major, government offices, or you're thinking about really lucrative lobbying positions for private companies, right? So the being the SEC chair is not usually an end. It's this is the point that, okay, now I get to really, do something. Either have a lot of power or a lot of money. And so with that in mind, he was the deciding vote for the Bitcoin ETFs, which everybody likes to kind of poke around with that because that is kind of funny. But I think him agreeing to it was just kind of like just finally giving up, just like, listen, we just got spanked in court right prior to that. This is the most difficult one for us to prove is bad and people shouldn't use it. The rest of them are questionable, quite a bit of them, and when you get into law here in the US, it's all case law, right? So anytime you're going to court over something, it's based on previous court rulings and what they've said. And if you're, you have to, if you're coming up as a defendant, or if you're trying to prosecute something that doesn't line up with the way something's been priced, you're going to come up with some unique way of doing it, right? Something different that doesn't fall in line with what was already decided. But a lot of what the SEC does, if we look at it, is they kind of get people in there, and then they get them to, to just agree to whatever they want them to agree to, and pay huge fines and do all the, and maybe shut down or whatever these things.
Almost like it's just an extortion racket.
Well, you use power in the way you use it, right? If you're a big company, and somebody sues you for something, even if you're in the wrong, you've got basically, if you're Exxon, you've got unlimited resources. You generally tend to try to keep them in court until they don't have the money to stay in the case anymore. Because the lawyers need to get paid. The experts they bring in need to get paid. People don't understand how expensive it is to actually go to court. I think we can look at what XRP has been paying, or what GBTC paid fighting against the SEC. It's astronomical. Most people don't have it. So the idea is you get them in there and you say, listen, we're going to, without saying it, you're basically like, listen, we're going to bankrupt you, or you're going to agree to what we're saying here, and you're going to do what we say. And I think that's, our court system, even on the civilian side of the civil side of it, not civil side, but the, like where you've got you and me, right? If we're to,
civil, it's a civil case.
Well, not even civil case, criminal cases. If the DA says, listen, we're going to bring you up on charges for this, but hey, listen, and if you're found guilty, you're going to spend 20, 25 years, 50 years in jail or prison. But hey, listen, if you agree to this lesser charge, you can be out in 2 years.
Right, right. They're jockeying it. They're playing chess with your emotions.
Because what do you want to do? I mean, first of all, most people don't have the money to fight. Second of all, there's always the chance that even if you aren't guilty, you're going to be found guilty. So, 90+% of those cases end up where
settled.
People are just signing off saying, okay, rather than actually going through court. And it's kind of that same thing on this other side. Well, if you fight us, if you're a company, if you fight the SEC, this could cost, tens of millions, hundreds of millions of dollars, might potentially bankrupt you. We can get off easier just, whatever, and agreeing and doing that. And so I think that's kind of what the SEC kind of throws around their weight that way. And most, most people appease. Most people say, okay, okay, well, we'll say what you said.
All right, well, let's get back on the crypto focus, and we'll wrap this out here in the next few minutes because this is being recorded Friday evening, and I think this is going to be going out tomorrow at 10 a.m. with all of you, and I'll be live in chat if you're there. Everybody, hit that like button and subscribe button. Make sure also, I just want to shout out really quick before we wrap out with the last few questions, that you make sure and head over to Chris's Twitter page, which is right here at TX West Capital. This is what it looks like. Give him a follow, drop a comment, drop an emoji on his timeline. Just say, hey, you're doing well. Love you, buddy. I'm sure he'd appreciate that. So, Mr. Chris, what are you looking at right now? We got Bitcoin, we got Ethereum. I know you're an avid trader and investor and trader in this space. Do you feel like there's a particular narrative that is overhyped going into this cycle? And then also, is there a particular narrative that you think is kind of being ignored or doesn't have enough focus on it?
I think, well, okay. So one that may be overhyped a bit. I'm not even sure if it's really there, overhyped, but real world, can't even say it, real world assets, RWAs, right? We know BlackRock is tokenizing its stuff. But I think we're really, really early in that. I don't think people are going to get the returns they're maybe necessarily looking at as short term as they're looking at it. So that would probably be the closest thing I could find to something that maybe is overhyped at the moment, because again, it's there. It's kind of like the ETFs. It was there. Finally, it happened. Other than things that are maybe I don't know what we got. Meme coins are just. I wish people would understand. Meme coins are not where you're gonna,
endure your wealth into the future.
yeah. Meme coins are gambling, guys. Most shit coins are. I mean, that's the reality of it. Okay, and all you have to do is look at the way in which people, your influencers push them on there, and then things that are going on to really recognize this. There is a difference between trading and gambling, and unfortunately, a lot of people come in. Especially with crypto, because it's so easy to get in, right? Especially used to be, it still is today. It's really easy to get in and to do it. So, but people come in, they're like, oh, well, I'm in crypto, so I'm a trader now. Well, no, unless you're using proper risk management and, if you're analyzing what's going on here, maybe then, but most of y'all are just like chucking money into left and right and seeing, what sticks.
Yeah.
It's gambling. Now, do what you need to do. There's some gamblers out there in the world that make a lot of money. I'm personally not a gambler. So, just understand what you're doing there with them. So, I think you got to watch out with that meme coins. I know a lot of people, it seems like, are really talking about AI being done or nearly done. I think we've got further to go with it, though.
I feel that way, too. Some people are saying the narrative's over. And I'm like, you know what? Yeah, every narrative is going to have a rise. And then what do we get? A retrace. And then what do we get? Continuation. Yeah. I think because, I'm sure you saw it. You follow these markets, the recent partnership with NVIDIA and Google. Did you see that? It's like on the cusp of it's supposedly this narrative's over. I mean, I could see it maybe being a little bit calmer for a few months, but that means a few months more of opportunity to start and I don't want to buy let me ask you a question on this. I don't want to buy something 7 minutes before it pops off, because to me, that's luck. Yep. I'd rather buy something, even if I have to hold it for 4 months or 6 months before that narrative runs, because if I'm buying it 6 months before the narrative truly pops off, that means I'm looking at data before the masses know it. And this means I have conviction on it. And so along the way, if I'm getting better opportunities, I get to strengthen my position before the train runs away from the station.
Yeah, they always talk about, it's easy come, easy go, right? And if you're buying, like let's say you're on the chart and you draw a diagonal, and you get this pop up through it, right? The pullback's done, now we're getting pop up, and you're getting in right as that happens. Well, I mean, emotionally, psychologically, you're going to be much, you're going to have a lot more, you're going to have a lot more difficult time with your emotions the minute it stops rallying immediately, because you're getting in right as it goes, right? If instead, if you're working, if you're looking at something, you're studying a bit, you're looking at the chart, maybe it's forming an accumulation pattern of some sort, sideways chop, right? And you're watching it and you're reading it and you're trying to understand it. Maybe you're picking up on some news of what's coming or whatever. As you're doing that, the fact that you're taking that longer time, you're becoming more invested emotionally, psychologically into that possibility. And so what happens then is when it does break out, you're usually not going to be in that quick of a hurry to try and sell it the first time it starts pulling back. Because
Right.
that's where a lot of the retail traders get in there and they get lucky on a breakout, or maybe it's not so much luck, but they get the breakout. But because that's all they were focused on, their whole emotion in there is very short-sighted. And so the minute that thing starts pulling back, they're scared that it's not going to go up any further. And so what does it do? They get out and they make a little bit of money, and that's fine. Nobody ever lost money making profit, right? But they pulls back a little bit and then it shoots up and it goes up like hundreds or even thousands of percent after that. And they're like, oh my God, I should have stayed in. I shouldn't have done it. But a lot of that comes from what you were just saying there. Do you have the time invested as it's producing some sort of range, studying it, looking at it? Because then you start looking at, well, if it does this, then what are we actually looking at? Are we really looking at these bigger targets here? And that gives you a bit of emotional resolve for when the price shoots up first. You get really excited. It's hard not to. I've been doing this a long time. I still get excited on a quick pump, right?
Yeah.
But when it starts pulling back, the emotions immediately go the other way and you start freaking out. If I don't take my profit here, what if it goes all the way back down and I don't get anything? Oh my God.
Yeah.
You know, and so it gives you a little bit of emotional resolve to kind of help deal with that. And then as it takes that higher, and then you're like, oh, okay, here we go. Yeah, now it's doing what I was thinking it was going to do, and I'm feeling good about it again. So yeah, I mean, for me, in the way that I teach, anybody that'll listen, whether they pay us or whether it's the free stuff I do online, you should, as a trader, generally, if you want the best success, you should be getting in when everybody's depressed. You should be getting in when the ranges are there, the lows of the range, when everybody's, oh my God, it's got to go down. It's got to go down. When BNB pulled back to 100, finance
185.
coin to like 180, 200.
Yeah.
And everybody's like, oh my God,
It's going to
CZ
40.
yeah, it's going to drop through all those candles and get down there. And, I told twice when it went down there, I said, Look up to the top of the range, up there, $600." And then we had a diagonal and I was like, wouldn't it be a shame if this broke out? I posted it on Twitter. So, if somebody was following me, listening to me, well, they had three opportunities there, the three absolute best opportunities to buy in. But it's really difficult when you don't have experience to understand that. So a lot of new traders come in thinking the other way, the same way I did when I first came in, which is I just need to find the breakout, buy that so I can be up immediately, make money. It doesn't go back against me. I'm not scared. I'm good. But yeah, I mean, I agree 100%. It's the way I do it. I always look for some sort of range going on there. I'm looking to identify it as some sort of accumulation or reaccumulation, and then buying on the lows of those range, preferably, rather than waiting till the top of the range or the breakout. Because if I buy at the lows of those range and I'm right, well, I don't have to do any work. All of a sudden, the rest of everybody that jumps in is going to carry that price up for me, and I can just sit back and smile, right?
You know what? I think that's a good spot to wrap this on. What a great conversation, Chris. And everybody, again, make sure you go and follow him at TX West Capital. If you could give a closing thought, a closing sort of just a little bit of encouragement for people, whether they're new, old, whatever, it doesn't matter where they're at in the space. What would be your number one point of encouragement or advice going into the rest of this cycle?
Yeah. So, guess what, guys? You're not special. But this is the best thing. What I mean is when you come into trading, you do the same thing that pretty much everybody else does when they first come in. And so because you're not special in that respect and you're doing something that's not so great, it lets you know, hey, listen, I don't have to be down on myself. I just have to acknowledge, okay, I'm just doing the same everybody else is. If I want to do better than everybody else, I just have to put forth that effort and learn, right? And in that way, you kind of get out of this, oh, I can't trade. Oh, I'm such a terrible trader. Oh, look at how stupid I was. because those kind of negative thoughts are always going to hold you back from doing what you need to do and what you can do. It's always the self-defeating thoughts in there. So understand you're not special when you're doing all that, which is fantastic, but then resolve to learn more, to do more. Whether you're going to pay for it from somebody, I guess you've got something that you do is that well there, right, Kelly, that they can buy into,
Yeah,
to learn to trade.
we've got a whole community at BitLab Academy, and I know you've got your community too. And nobody's
Exactly.
I don't rate one community better over another. There's different people that learn in different ways. And I'm in this just like you are. I want the rising tide to raise all ships. The more of us do well,
Right.
yes, I want to help people, but the more of you all out there that do well, the more your family see it. And it spreads a positive word about what can be possible in this space. I want everybody to do well.
Yeah, man, exactly. Well said. Again, whether you come to myself or Kelly or anybody else out there that's selling, education, right? Or that's selling a community. Because I'll tell you what, you can get bored, you can get lonely trading, right? Communities are really great. Plus, if it's a good community, you've got a lot of good eyes out there finding opportunities that you may not find. But whether you're doing that or whether you're trying to do it for free, right, and trying to find information online, just try. Just try to do it. Don't assume you know everything that's going on out there. Even today, I've been doing this for a very long time. I still assume that I don't know everything there is to know. I still try to get better. My risk management, every single day I work on it. And I've been doing this for almost 30 years. But every single day I work on it still. If you guys can do that thing, focus, discipline, consistency, and patience, you're going to be okay. You're going to be all right. But you've got to do that, though. It's not going to happen for you. You've got to step up there and make it happen. But you can. You can. You really can.
Yeah, hallelujah to that. Well, I love having you here, Chris. I look forward to running into you either in person because we intentionally mean to, or bump shoulders at a conference sometime in the next couple of years. Actually, this year, I should say. But I hope you're doing well. I hope your family's doing well. You guys had the eclipse, dimming the lights around your house recently. So hopefully that brought some new energy in. And I look forward to having you back on again soon.
Man, I'll tell you what, man, I love the conversations every time, man. You're somebody I enjoy talking with. And man, I just hope people listen. You're putting good stuff out there. You're giving people a lot of things to think about and a lot of information. And man, all they got to do is just listen. Just got to open their hearts, open their minds, open their ears. Listen. That's all they got to do.
I said this on today's show. If you're watching this now, I said it on Friday's show. And that was that we have access right now to more information than we've ever had access to in the history of ever. And it's at our fingertips on demand. And I'm calling each and every single one of you out right now. If you ask anybody in your life for direction somewhere, you are a jackass, because all you need to do is type in your phone and not make them type it in to send it to you. This is the same premise as trading. This is the same premise as how do you cook something. We have access to the wealth of every bit of knowledge that we could have ever happened. It all comes down to, are you the type of person that's ambitiously curious? And do you have the action built into you to say, well, let me see how that's done. If you do that on a regular basis and put it into practice, you will dominate anything you're doing. But this is our TED Talk. It's me and Chris. Big love to you. Everybody go have an absolutely wonderful Saturday. And again, Chris, thank you for being here.
Appreciate it, man. Thanks a lot.
Adios, muchachos.